Compliance of industry players, especially those whose fraternity does not have clear leadership or under any form of mandated regulation, is still a challenge to the Financial Intelligence Authority in their attempt to fight money laundering and terrorism financing.
Now, for entities that have prudential regulators, the compliance rate ranges from 30 to 50%. The ones that I've mentioned. The biggest challenge lies for those entities or sectors which don't have regulators. For example, real estate. Real estate agents are supposed to register, but they don't have a regulator. Then you have the virtual asset service providers, your friends, the cryptocurrencies. We have registered only 13 of them ever since the
Companies operating in high money laundering risk sectors, for instance the financial institutions, real estate, and virtual assets such as cryptocurrency dealers among many others, are now required by law to put in place policies, controls, and procedures to monitor and address risks relating to money laundering and terrorism financing.
You know who's supposed to be a reporting entity, then you're able to check on an annual basis whether they are complying with obligations. One, they're supposed to file annual reports. So if you have a complete register, you will know who has not filed and who has filed the annual reports. Two, they're supposed to file periodic compliance independent reports.
To, of course, work closely with the private sector to also clearly secure their systems, because the more digital you go, the more susceptible you are to cybersecurity attacks.
Industry players who will not comply with the online registration requirements will be fined up to 150 million with compounding interest. Ismail Musa, Ladu, NTV Business.